Best performing sector in the S&P 500. It is up 38% this year. Yet most investors remain underallocated because, well, they're concerned about the volatility in oil prices. Joining me now, Rob Thummel, Tortoise Capital Managing Director and Senior Portfolio Manager. Rob, good to see you. So,
thanks for having me, Lauren.
Of course. Energy makes up a large part of the consumer price index. You can see right there how much smaller the bar is when you take out the energy and you look at the core. Do you think the White House's focus on U.S. energy production and U.S. dominance will in any way make consumers feel a little bit better about either investing in oil or, when they go shopping?
Oh, absolutely. I think the U.S. energy sector has kept prices down, has kept inflation down significantly because the U.S. has become the largest producer of energy in the world, one of the largest producers of oil in the world, and the largest energy exporter in the world. And so things like things get hidden, like when we talk about oil a lot, but what we forget to talk about are things like natural gas, which natural gas is really important. And the U.S. has so much natural gas that we're exporting natural gas all over the world.
Yeah.
And all of these factors are going to be really important going forward.
President Trump said today, and I quote, the midterms have nothing to do with my thinking, implying that the conflict with Iran is not going to be over anytime soon. But, Rob, the midterms are about 80 days away. Can record U.S. production and record U.S. exports fill this gap and help bring gas prices down when you go to fill up at the pump?
Well, if you think about what's gone on so far, if we wouldn't have had record U.S. production, if we didn't have U.S. refineries operating at well over 100% for multiple days and really multiple months, gasoline prices would be significantly higher than where they are right now. And so I do believe that, gasoline prices, diesel prices, jet fuel prices, obviously affordability is a big deal. Getting the Strait of Hormuz open would help. But all of that said, the gasoline prices, the energy prices in the U.S. Actually are much lower than they are pretty much anywhere else in the world, partially because, and almost primarily due, because of the low-cost natural gas that the U.S. continues to operate.
Yeah, your firm has an energy ETF. It's said to cover the entire energy value chain. Can you walk us through the reasoning for some of the top holdings in it? Let's go through them. The first one is Marathon Petroleum, but you also have Valero, Chevron, and Diamondback Energy in there. Why these names?
Yeah, in our Tortoise Energy Fund, TNGY, it focuses on the refiners to start. We just see tremendous opportunities in the U.S. refiners. Gasoline inventories, you're talking about crude oil inventories earlier, which I think is a very great observation, but gasoline inventories are pretty low as well and are probably going lower. And so refiners like Valero, like Marathon will continue to need to produce more and more at capacity, actually above capacity. Yeah. And then in addition to that, you're seeing refining margins have widened out because of the scarcity of gasoline to diesel and jet fuel. Refining margins are very wide, which means a lot of cash flow for these refiners.
Just to explain this for people, you take a barrel of oil and then you refine it into, let's say you're doing diesel, gasoline, jet fuel, right? It's the margin for those fuels that it's eye-popping, but you have the refineries, the processing plants operating at full tilt. I mean, are you concerned at all that it's just one power outage away from having a major problem?
Well, I'm not concerned about that because the refiners have done a really good job of preparing themselves. They've done the maintenance that they need to ensure that they can perform when they're needed, and they're needed now. Mm. The other advantage that U.S. refineries have is a lot of the operating costs to operate U.S. refineries in the U.S. Uses natural gas to generate, for electricity and things to operate the refinery. In Europe and other places around the world, natural gas prices are significantly higher than they are in the U.S. But where you were showing West Texas earlier, West Texas natural gas prices are really low, sometimes below $1. That is a competitive advantage. Natural gas is a competitive advantage for the U.S. that the U.S. can use to really optimize and win this global AI race.
Rob, let's pivot to AI. If you look at memory and storage, I mean, those shares have been on a roll recently. Micron specifically, it's at above 1,000 a share, up 5 days in a row. Western Digital, Seagate, these are all top holdings of your AI infrastructure ETF. Why these names? Do you think they're bulletproof? That's the expression I've been using on the show.
I don't know bulletproof, Lauren. I don't know if any stock is bulletproof, but in our AI infrastructure fund, TCAI, it's a great run. It's a little over a year old. It's up over 100%. And it's achieved that by investing in what companies where we think that are largely undersupplied, and memory and storage is a really undersupplied industry. So Micron, as you mentioned, SanDisk, these are really important companies to develop AI and enable AI going forward. And so because these companies are seeing tremendous growth, but there's also a shortage of memory and storage, they're able to expand margins, expand volumes, and that results in some pretty strong or very strong earnings per share growth, which then is translated into substantially higher stock prices.
Yeah, and high memory prices, according to KeyBank, are expected to stay pretty high for the next couple of years, so you can say this trade does have legs. You're also buying Bitcoin miners as AI plays. Riot Platforms is one of them as they transition to be, what else? An AI data center. Will you see more companies such as former Bitcoin miners transform themselves to be AI companies?
Yeah, DCI, that's where we've been most successful, is finding these companies that are transforming into playing some role in the AI economy. And Bitcoin miners are playing an important role. They're not Bitcoin miners anymore. What they are becoming is data center operators. And why? Well, they're converting or transforming their business models because they have access to electricity. So you have companies like Riot Platforms that just last week announced a multi-year or multi-decade, actually, or multi-year agreement with Anthropic for billions of dollars, basically, in order to generate or to utilize their existing former Bitcoin mine to run an AI data center, and we're seeing that happen with multiple of these former Bitcoin miners. TeraWulf is another example of these Bitcoin miners that are doing this, and it's been a tremendous opportunity for us at Tortoise in terms of investment returns, because as these companies have transformed their businesses from more volatile businesses to more cash flow fee-based type of businesses, that has obviously resulted in higher multiples.
Yeah, you know what's interesting, Rob? With the public outlash recently against data centers, BYOP is the phrase that is resonating. Bring your own power. If you are a company that can provide electricity, provide juice, investors are going to like what you do because you're powering the AI revolution, not at the expense of the utility and the customers that have to pay for electricity. Rob Thummel, thank you very much. Nice to see you. Up next,
thank you.
We'll dive